Good morning, and we have yet another FMCG retail company coming out with its Q2FY21 update. Now, overall, we have Titan, which came out with its Q2 update, and it seems a better update, a better performance by the company, obviously, than Q1, where it was a very tough quarter for the company. Company is talking about getting back to normalcy. They're saying the process is going quite well for the company, and they're saying that the consumers are now having a better acceptance, a greater acceptance toward new normalcies. Obviously, more consumers are getting out. Store footfalls are surely improving, though footfalls in malls is still relatively lower than previous year's levels, obviously, but they are seeing a recovery, obviously, on the sequential basis. Let's talk about jewelry segment, which accounts to most of their percent revenue. Talking about that, they saw a recovery of 98% in Q2 versus last year's sales, so last year Q2. So surely that's a great recovery that the company is seeing this quarter, and this recovery is excluding the raw gold sales. Also, overall in the jewelry segment, so that is Tanishq and all, they have seen that the walk-ins are improving, conversion rate is improving, average ticket size is also improving. So that is surely a positive sign. They're saying that consumers are now coming out and maybe spending more, especially festive season coming in, wedding season coming in. That is surely showing some signs of improvement. Now, recovery which we are talking about in metros and non-metro cities. Non-metro cities are obviously recovering much faster and recovered substantially compared to metro cities. And overall, metro cities are also showing gradual signs of improvement, and that was the most impacted if you go to see metro cities. So surely improvement coming in, gradual improvement in metro cities as well. Studded ratio, very important, which is over here, that is not yet back to the previous level, so that could be a bit lower compared to previous levels, is what the company has said. But wedding jewelry for the company has done particularly well in Q2, so that could surely show some positive signs that if wedding jewelry is doing better now, then wedding season coming up in November, December, Jan, that could also show better signs of improvement for wedding jewelry for the company. Overall, the company has continued to sell its excess gold inventory which they had. So in this quarter, they managed to sell around 390 crores of this excess gold inventory. Now, moving on to the watch segment, that has also recovered around 50% in Q2 compared to last year levels. But in the month of September, they've shown great signs of recovery, and it's at around 70%. Overall, the e-commerce channels are doing quietly well for the company. Obviously, that's recovering very well for the company, while trade channels are still posing some challenge, maybe due to the destocking issues which the company has been facing. But overall, the work from home culture has surely impacted the metro city sales in the watches segment, because after office hours is not there, people are working from home, so those customers which used to walk in over there, that traffic is a bit lower, and low traffic in malls is also something that has affected the large format stores. Eyewear segment again has shown decent recovery. Up, it is about 58% of last year's revenue. So decent sign of recovery compared to Q1. If you see on a QOQ basis, last year's level, obviously it's still lower, but overall the company's recovery is surely reaching the previous year's level. They're improving on a quarter-on-quarter basis, and that is something we're surely going to watch out for in terms of overall the company's performance. Though in eyewear segment, they have reduced the stores format, so that is something that could overall impact the company.